Is this the time to take a look at companies that have exposure to emerging markets, indeed companies that are headquartered in these markets? Kevin Shacknofsky is a portfolio manager of Alpine Mutual Funds. And now, welcome, Kevin. Good to have you with us. Thanks for coming in. What's been going on this summer? I mean, you call it something called a restocking or a destocking rally. Explain what that means. The cupboards have been bare on corporate balance sheets as well as on inventory levels.
Sure. Well, post-Lehman, most companies in the industrial sector completely destocked, pulled in the hatches, were very conservative. And now that the world isn't ending, the Ben Bernanke has helped save us, they're now restocking and building back inventories again. So we've seen a phenomenal growth in industrial production, which is seen, and you've seen this in PMIs and ISMs growing. But the question is end-user demand going to be there? And as our president just commented, we still have an over-levered consumer, and therefore this will be a headwind for the economy, and the local economy should have a slow period of growth coming out of this recession.
All right, but when you talk about destocking and this whole restocking, it's companies actually now producing, industrial production going up in order to fill those shelves. Is the demand that we've seen so far, is that coming because the government has tried to pump in a lot of money to replace the money that somehow just disappeared in all of that wonderful subprime meltdown?
Well, definitely, because the government has rescued the financial system, as well as the capital raising that the banks did themselves. In order for the economy to function, they need to be able to raise funds from banks through lending. But now that the government, through their support, has stabilized the financial system, the economy can right-size itself and go back to a normal period of functioning.
All right. Well, now you've been prospecting actually not in the United States for companies to add to the mutual fund, right? You've been looking overseas specifically. Talk about one of them. I know that one is Mitsubishi.
Yes.
And I got to say, Mitsubishi, the Japanese market, why would you be looking there?
Well, Mitsubishi is actually a great play on China. What we see as one of the greatest beneficiaries of this huge investment boom going on in China through their own fiscal stimulus program, and the investment infrastructure has been a huge demand in commodities, specifically steel and its components, iron ore and met coal. 50% of Mitsubishi's business, or actually, 40% of their business is iron ore and met coal, and another 20% is energy, which is also being benefited from this investment. And so this has become like a commodity company, and it is not getting the respect that other commodity companies have. Companies like BHP, Rio Tinto, they have appreciated dramatically.
Is that because, just let me interrupt you, is that because you look at the name Mitsubishi and you don't think energy, you don't think iron ore or oil or natural gas or coal?
That's correct.
You think in Japanese industrial conglomerate that makes television sets?
Sure. You normally associate it with electronics, etc. But they had a strong investment in commodities over the last cycle, and now, when other businesses are lagging, these are making up the majority of the company. And what we especially like is its met coal operation, which operates jointly with BHP. It's JV with BHP, and met coal is one of the strongest materials in demand right now.
Metallurgical coal used to make steel products.
That's correct, because this is, you have to buy what China is short. And copper is one thing that China is short, but the other thing is met coal, because they've had to close a lot of their dangerous mines that were killing a lot of their employees, and now they need to replace that by importing.
All right. So now would you be buying shares of Mitsubishi right now?
Sure.
You like the price?
Definitely.
The fund, I'm just taking a look. The fund is up, what, about 38% so far this year?
Sure. Definitely would buy Mitsubishi. It trades a big discount to other commodity companies like BHP and Rio Tinto, and it gives you that same exposure to the upside.
What do you think the reason is that it trades at this discount? Is it because it's a Japanese listed company and no one really wants to touch anything in the Japanese market?
One of the components, but what you usually find when a market rebounds from like we have rebounded here, is that people go to the names they remember and recognize, and they don't have time to do the research and catch up with the laggards. And I think now that we've had this huge rebound, the market has come a long way. I think now's the time to focus more on stock picking, and rather than on the bellwethers like a BHP, and finding those undiscovered stories like Mitsubishi.
All right. Well, here's another undiscovered one that I know that's in the fund. This is Cascal, right?
Yes.
This is a UK company, but it's got operations in Africa as well as in China. China and Indonesia. Talk about Cascal.
Sure. So this is a company whose half its business is a regular UK utility, but what they've done is in recent years they've gone and bought water and waste management utilities in China, Indonesia, Chile, and so you've got the stable cash flow being produced in developed market business, but now you've got this emerging market growth. And what is really interesting, this is another undiscovered story, trades at only 9 times earnings, and whereas UK utilities generally trade at 11, and US utilities, because of their monopoly status, usually trade at 17 times earnings, and this is a much better story because you've got the emerging market growth. So this is another laggard and undiscovered story that we think will do well in the medium term.
All right, and you're getting a little bit of yield, right? Because, I mean, it's paying, what, about 3% right now?
That's right, yes.
All right, because I know you like looking for those stocks that at least give you something while you wait for the capital appreciation.
That's
All right,
correct.
we're going to continue the conversation. We've got more with Kevin Shacknofsky. He's finding opportunities in Asia as well as Latin America, including one stock that is notching up growth in both of these regions. This is Taking Stock on Bloomberg. I'm Pim Fox. I'm speaking with Kevin Shacknofsky, portfolio manager at Alpine Mutual Funds. Now, as we talked about the U.S. economy just beginning to show some signs of life, Kevin, you've been looking at companies focused more overseas. Talk a little bit about this cosmetics company, Avon. What are we talking about? 60% of their earnings coming from outside the United States, right?
Sure, and most of that's emerging market. 50% of the business is Brazil, and they sell beauty products. Brazil is the largest consumer as a percentage of discretionary income of beauty products. And
in the world?
In the world, yeah. And actually 3 times the rate of the U.S. So
I'm not going to touch that one at all. I'm going to just let you pick the stocks there that make the money on that kind of spend. But 3 times.
Yeah. So and what's really what usually happens in emerging markets as disposable income grows, the first beneficiary is consumer staple-like products like beauty products and also toothpaste, those sort of consumer staple type products. And usually what happens is, the economy is going to grow, 3-4 times the rate of the U.S. economy. And what will happen is the market for these products usually grows at a rate of 1.2 times GDP growth. So you've got a really strong fundamental underlying demand there for these products.
What about with Avon specifically, though? Is it because it's such a branded product that the consumer in Brazil really wants to sort of have that aspirational purchase, or is there something else that's going on there? What about like a distribution network, for example?
That's what Avon actually excels most at, building out their rep network and their distribution. The typical Avon lady. And what has happened in this economy, they've actually been able to grow their reps dramatically, not only in the emerging markets, but in the U.S. In the first quarter of this year, they grew their reps by over 50%. And that's because as people become unemployed, they need to supplement their income. And becoming an Avon rep was the way to go.
What about you mentioned Brazil, specifically emerging markets, but what about areas like China, like Russia?
Sure.
Are you seeing a build out there, and is that going to add to the bottom line of an Avon?
Russia's been a great market for Avon, and Central Europe. I think it's now 15 to 20% of the business, and also disposable income there is growing, and also there's a big emphasis on people supplementing their income and becoming an Avon lady. China, what is phenomenal. I mean, the company as a whole has about 5 million reps. In the last 3 to 4 years, they've been able to add 1 million reps in China alone. So, and now that is still, immature business. They're new people that need to be trained up and develop their own sales network. But once that becomes, develops and mature, they'll develop strong returns out of China.
All right, so let's move from Avon to some of the other consumer-oriented companies that you're looking at. Hypermarcas right now, this, as you said, the idea that if you've got a growing middle class, they've got more discretionary income, they're going to spend more on those kinds of consumer staples, or in some places, we might call them luxury items if they're a little bit more expensive. But what's going on with Hypermarcas?
Hypermarcas is basically the Procter & Gamble or Unilever of Brazil. They have a suite of consumer staple products, leading brands in beauty products, which we know Brazil is a great market for beauty products, and over-the-counter pharma and food. And this company has done a phenomenal job of making acquisitions in the last few years, building up their stable, and it's a good management team, and we see it going forward being able to generate, strong organic growth from, the growth in the economy and the growth in disposable income, plus build, supplement that with further acquisitions.
All right. Now, this trades at what, about 15 times
Yes.
estimated earnings? I mean, can they continue to grow the company at a 15 to 20% growth rate?
Yes, we see the next 3 years 15 to 20% growth in their earnings. So
right.
You're getting a really good price on that growth.
All right, so you've been buying shares of those. Now, let's go all the way back to China for just a second, because I want to ask you about what's going on with the infrastructure spending there. Domestic stimulus package, we know that story. So is there a way to really play that and for investors to bet along with the Chinese government spending all that cash?
Sure. Well, our favorite play on the China infrastructure boom is a company called China State Construction, Hong Kong-based engineering and construction play. And it has phenomenal political connections in China, because its parent company
always
is
something very good to have,
yes.
right, when you're dealing with doing business, well, just about anywhere.
Yes. So, and because of those political connections and its dominant share of the Hong Kong market, we expect, a steady stream of new orders for big contracts coming in the next year. The Hong Kong government alone has announced 10 mega projects of huge new railway systems, new roadways to be announced to stimulate their own economy in this downturn. And we see them as one of the big beneficiaries. And not only that, we see them gaining new projects in China, which actually are much higher margin projects.
Why is it higher margin in China? China State Construction. Why do they get better margins in China than they do, let's say, in Hong Kong? Just because labor costs are lower?
Well, no. Yeah, one definite thing is labor costs, but the other thing is they use this build and transfer model, where they build it, operate it, and then pass it back onto the state. And under the terms of those agreements, they're able to generate very strong margins.
What about the expansion of the, let's say, airport network? Is that also going to benefit the China State Construction?
Yes, due to their strong position in the Hong Kong market. When those new projects are announced, we expect them to get a lion's share of that business.
All right. Now, talk just a little bit about the fund, because, I mean, is it tougher now finding companies that sort of qualify to produce the kind of growth but also the kind of dividends that you're looking for?
Yes, definitely. During this downturn, we had a lot of companies cutting dividends, especially in the financial sector. So we've definitely had to cast a wider net. And but what we found is the market has probably traded on macro conditions in the last 6 months. Okay. It's now a stock picker's market, and that's what we're focusing on.
All right. I want to thank you very much, Kevin Shacknofsky, coming in from Alpine Funds. We're talking about emerging markets.